Welcome back. This is the summary of Chapter 4 of Rich Dad Poor Dad by Robert Kiyosaki. The title of this chapter is The History of Taxes and the Power of Corporations. In this chapter, Kiyosaki digs into the history of taxation, why it exists, who it really benefits, and how the rich legally avoid paying the same portion of taxes as the poor and middle class. He also introduces one of the most powerful tools of the wealthy, the corporation. Let's break it down. Taxes were once only for the rich, now they're for everyone. Kiyosaki starts by explaining a little-known historical fact. Taxes weren't always imposed on everyone. In ancient times and even in the early days of modern civilization, only the rich paid taxes. Then came the idea of taxing the masses. And how did governments sell it? They promised the poor and middle class that taxing the rich would help everyone else. It was presented as a noble, fair idea, a way to create equality. And it worked. The masses voted in favor of taxes, believing they would benefit from the wealth redistribution. But here's the twist Kiyosaki exposes. The rich found ways to legally avoid taxes. The burden eventually shifted to the middle class. This happened because the rich understood the rules of money better than anyone. They understood corporate structures, tax loopholes, and investment strategies. Meanwhile, the middle class, loyal to job income, became the primary source of government tax revenue. The rich play by a different set of rules. Let's be clear, Kiyosaki is not promoting tax evasion. What he is promoting is financial education. Rich Dad taught him that the rich don't necessarily work harder, they work smarter. They understand how to legally use corporations and laws to protect and grow their money. The poor and middle class often operate under one simple formula. Earn, get taxed, spend what's left. But the rich, by using corporations, follow a different formula. Earn, spend, through the business, get taxed on what's left. That's a huge difference. Let's look at an example. Why corporations are powerful. A person earning $100,000 might pay 30% or more in taxes before spending anything. But if that same person earns $100,000 through a corporation, the business can deduct legitimate expenses before taxes, like travel, meals, salaries, equipment, and more. So the taxable income becomes much lower. And the person gets to enjoy life with pre-tax dollars, while others live on what's left after taxes. This is one of the key messages of Chapter 4. The rich use corporations as a legal shield. They don't necessarily own everything in their name, but they control everything through entities. The corporate veil. Kiyosaki introduces the idea of the corporate veil, the legal separation between a person and their company. This veil allows the wealthy to protect personal assets, reduce legal exposure, and take advantage of business benefits not available to the average employee. For example, if someone sues your corporation, they sue the business, not you personally. Compare that to employees or sole proprietors, who are personally liable for almost everything. That's why Kiyosaki says, the rich don't own things personally. They control everything through corporations and trusts. This is not shady. It's just smart. But most people never learn these rules. They go to school, get jobs, and pay taxes, without ever questioning the system. Why financial education is crucial. Kiyosaki says the tax system isn't unfair. It's just that most people don't understand it. He writes, the problem with secure jobs is that they are taxed to death, and the government loves employees. Why? Because employees are the easiest to tax. Their income is reported, deducted, and paid before they even see it. Meanwhile, the rich design their income to flow through legal entities, often taxed at lower rates and with more flexibility. That's why financial literacy is essential. If you want to build and protect wealth, you have to understand taxes, corporations, and the legal tools available to you. The government and corporations, a symbiotic relationship. Kiyosaki also points out something many overlook. Governments and corporations are interdependent. Governments need corporations to grow the economy, create jobs, and collect corporate taxes. In return, they give businesses incentives, like tax breaks, subsidies, and credits. So while the average person complains about taxes, the rich quietly take advantage of this relationship. They invest in real estate and get tax deductions. They run businesses and write off expenses. They fund innovation and qualify for government credits. All of this is legal and available to anyone who takes the time to learn. Rich Dad versus Poor Dad on taxes. This chapter also contrasts the viewpoints of Rich Dad and Poor Dad. Poor Dad believed in paying his fair share and trusting the government to manage the system fairly. Rich Dad saw taxes as a game, with winners and losers. The winners understand the rules. The losers follow the system blindly. Rich Dad believed in hiring smart accountants, attorneys, and advisors to navigate the system, not just obey it. Kiyosaki makes the case that financial ignorance is what keeps most people paying more than they should, while feeling helpless. The lessons Kiyosaki wants us to learn. Let's pause and go over the key lessons from Chapter 4. 1. Taxes were originally designed for the rich, but now they fall mostly on the middle class. 2. The rich use corporations to protect income and reduce taxes, legally. 3. Corporations offer legal protections, write-offs, and strategic advantages unavailable to employees. 4. The tax system is not unfair, it rewards those who are financially literate. 5. If you want to succeed financially, you must learn the rules of the money game, including tax and corporate law. 6. You don't have to be wealthy to use corporate structures, you just have to be educated. How you can start using this knowledge. So what can you do? You don't need to be a millionaire to start thinking like one. Here are some starter steps inspired by Kiyosaki's advice. Learn about LLCs, S-Corp, and C-Corp. Consult a tax professional familiar with business and investing. Read books on tax strategies and asset protection. Start tracking your income-producing activities. Can any of them be turned into a side business? Look at your expenses. Could some of them be shifted into legitimate business deductions? The earlier you apply these principles, the faster you gain control of your financial destiny. It's not just about money, it's about freedom. Kiyosaki's ultimate message is not just about reducing taxes. It's about freedom. Taxes, liabilities, and legal risks can enslave people, even those who earn a lot. But financial intelligence, strategic use of corporations, and careful planning can create financial freedom and protection. And that wraps up Chapter 4. Here's what to take away. It's not how much money you make. It's how much you keep. And it's not just what you earn, it's how you structure your income. Corporations aren't just for big businesses. They're a tool for anyone who wants to control their financial future. If you found value in this summary, give this video a thumbs up. Subscribe to the channel for more chapter-by-chapter breakdowns. Comment below. Did this chapter change how you view taxes and corporations? Next up is Chapter 5, The Rich Invent Money. You won't want to miss it. See you in the next one.